どうも、勝手に電力2.0に始めたいと思います。今日は973回目ということで、ASEAN Renewables Opportunities and Challenges というところで、実際に ASEAN のこの再エネのこの機会とこの挑戦みたいなところ、チャレンジ、課題みたいなところですね。っていうところをですね、文章が出たので、このあたり、どんな対策をしていくのか、どんな機会があって、どんな課題が出てくるのかみたいなところをですね、知ってもらえたらいいのかなと。で、毎度ですね、チャット GPT もやっぱりせっかくの機会なので、どういうふうにチャット GPT がまとめたかっていうところで、この ASEAN 諸国における再生可能エネルギーの投資機会と課題について、報告書が挙げている報告をまとめたと。で、投資機会としては、ASEAN 諸国は再生可能エネルギーへの投資を増やす必要があると。で、太陽光発電や風力発電、バイオマスなどの再生可能エネルギーが有望な分野である。やっぱりこの太陽光、風力、バイオマスっていうところは、やっぱり ASEAN のところではかなり重要だと。で、再生可能エネルギーの導入により、エネルギーセキュリティと安全保障が実現でき、地域統合と経済発展を促進できる。ただ、この課題ですね、チャレンジっていうことですね。再生可能エネルギーの導入には、送電網の強化。やっぱり送電性が弱いっていうところなんですね。市場設計、政策策定、資金調達などの課題があると。これらの課題を克服するために、地域的な協力や技術の共有、政策の調整、民間セクターの参加などが必要であると。再生可能エネルギーに投資することで、環境保全や健康、地域社会などの発展、多くの利益が得られることがあると。で、報告書が提言する解決策として、ASEAN 諸国は政策や規制の強化、技術革新の促進、金融市場の改善、社会的な意識の向上を行うことで、再生可能エネルギーの導入を進めることができると。地域的な協力や技術の共有、政策の調整、民間セクターの参加なども必要であるというところで、ちょっと見てみますと、エグゼクティブサマリーですね。This report aims to improve financial transparency and provide more data pertaining to clean energy investments in association of Southeast Asian ASEAN member State 1. Our research has conceptualized renewable energy risk and return qualitatively and quantitatively. The report further clarifies the opportunities and barriers for private sector investors, as well as priorities and potential solutions for scaling up renewables investment. Individual ASEAN countries have been analyzed separately and as continuant parts of the regional dynamic. ASEAN countries such as Vietnam, Thailand, Malaysia, Indonesia, and Singapore have all committed to either net zero emissions or carbon neutrality by 2050. Governments have simultaneously increased the role of renewable power in national energy development plans. These dynamic or makes ASEAN markets potentially attractive to clean energy investors. Nevertheless, the region's economic development model remains based on fossil fuels, with a high dependence on coal-fired power plants. もう石炭とかやっぱりコールファイアですね。which account for more than 40% of power generation. To date, renewable power investment in Southeast Asia has grown inconsistently, and development remains far from harnessing the region's strong resources potential. Average annual capital expenditures of USD 10 billion in solar PV and wind power over the past 5 years are amongst the lowest globally and only exceeded that of sub-Saharan Africa. Most of these investments were mobilized in only one country, Vietnam. Private capital has accounted for only 60% of renewable power investment in South Asia, compared to about 90% in advanced economies. Renewable power development in the region is lagging from inadequate policy and investment frameworks. Regulatory barriers, incumbent interest, and inflexible commercial arrangement have enabled the continued prioritization of fossil generation over renewables. Despite falling costs around the world for renewable technologies, solar and wind project costs remain elevated in Southeast Asia due to lack of deployment scale and development of supply chains. Attracting low-cost financing remains a major hurdle for development, with persistent development, operational and economic risks. Financing costs for solar PV and wind remain relatively high in many ASEAN member states, and the financial value proposition for private sector investment often remains less clear than in advanced economies. On the deployment-weighted basis, We estimate that investment in onshore wind projects across the ASEAN region is characterized by the nominal cost of capital or around 9 to 12% in local currency terms. This range is around 8 to 11% for utility scale solar PV, while that for commercial and industrial scale solar PV is assessed at around 10 to 13%. These values strongly depend on underlying interest rate, conditions, and market-specific dynamics, including project-level commercial and financing arrangements, which can push metrics above or below these ranges. To meet sustainability ambitions, countries in Southeast Asia will require much higher level of energy sector investment, reaching at least USD 200 billion by 2030, of which over 3/4 in clean energy. These clean energy investments include the widespread rollout of renewables, improvements in energy efficiency, electrification of end use, and the deployment of low-emission fuels, including modern biology, hydrogen-based fuels, and carbon capture technology. To attract this level of capital, many energy transition plans and ambitions across the region require better policy design and regulatory improvements to support their implementation. For example, supportive policy incentives in Vietnam have spurred significant solar and wind built out over the past 5 years. However, the policy process has been characterized by boom and bust deployment cycles and significant grid congestion. This report identifies priorities for decision makers to help unlock investment in renewable power, which focus on attracting lower cost capital from international investors, while country-specific priorities are highlighted in dashboard found in Annex A, covering key markets of Indonesia, Malaysia, the Philippines, Singapore, Thailand, and Vietnam. Some cross-cutting priorities have emerged. Notably, the investment climate for renewable power in the ASEAN region would greatly benefit from better data and transparency around project-level financial performance, stronger regulatory frameworks concerning remuneration for renewable projects, more robust financial market frameworks for renewables and transition investments, and enhanced law for development finance institutions (DFIs) and blended finance, greater access to risk hedging tools to address credit and currency risks for private investors, improved power system connectivity across the region. Progress is occurring in many of these areas, but stronger efforts are required for the ASEAN region to shift toward a more sustainable energy pathway. The potential benefits of such a shift are considerable, including reduced vulnerability to climate change and fossil fuel price volatility, as well as enhanced economic opportunities from clean energy development. This is a further report in a series of joint publications by Imperial College London and international energy agencies, designed to improve transparency that would enable investors and policymakers to play a bigger role in the energy transition. That's all. Thank you.